Hi friend, this is Peter Bain, founder of forexmentor.com. Welcome to this video tutorial. And I'm going to be talking about how to buy the best pair in terms of trading value. That would be the euro pound. And we're going to be focusing on the golden rule of buying the dips in an uptrend on the euro pound. Now, to determine the value of 1 pip in a standard account for the euro pound, we go to the pound dollar chart. Anyone will do for the pound dollar, and we notice the most recent exchange rate 1.6111 for the pound dollar. That translates into $16.11 for the euro pound, standard pip in a standard account. Just by looking at the exchange rate for the dollar pound, moving the decimal point over 1, and you've got the value of a standard pip in a standard account for the euro pound. $16.11 as at this particular chart on this particular date. It changes on a regular basis, obviously, with price action. Going back in time to, in this case, March 23rd, we have MACD divergence. We have MACD waving at the same level, price cycling lower. That's considered positive divergence on MACD to price, even though it's waving at the same level. We're expecting a rise in price, and we got it. Now, you can see here that we have a trend line break here on the 23rd of March, confirmed by MACD punching up through its trigger line. Also here on the 23rd of March, we have price breaking through this common sense trend line, same as back here, common sense trend line, common sense trend line. Broken right here, confirmed by MACD punching up through its trigger line. Buy here, buy. We're buying the dips in the uptrend as facilitated by the 200 EMA. This is a dip in the uptrend, a dip in the uptrend, and away we go. Now, that was followed by leg 1, price equilibrium consolidation, leg 2. Followed by a demand or support trend line, a Tom DeMark demand or support trend line, swing lower, cycle low, back to the last most recent swing lower, cycle low, projected out in the future, and we have a trend line break here. Now we're looking to buy this pair. We're not looking to sell this pair. So this is just telling us that we're experiencing price weakness, even though the trend is up, 50 EMA above the 200 EMA, good angle and separation. We're looking to buy this pair on a dip in the uptrend. Okay. Now we're going to wait. You can see this trend line break confirmed by MACD punching down through its trigger line. Going to wait for a turnaround, and there it is. We had a collapse in price right here below the Tom DeMark demand or support trend line, and then we have a 1, 2, 3 bottom at the 50 EMA on this pair, confirmed by MACD punching up through its trigger line. Good buy point right here. A very weak buy point, by the way. It's better to bounce off of the 200 EMA, but we're going to look at this one, a 1, 2, 3 bottom. Good entry point. We have another buy point right here, confirmed by MACD bouncing off of its trigger line. A buy point here and a buy point here. These were buy points down here as well. These were better buy points because they were below the 200 EMA, or below the water line, pardon me, for MACD. Okay, these are better buy points than these up here. One buy point here and one buy point here. You'll see as price action unfolds that these were very weak price buys, and we would be well advised to collapse these trades if we experience weakness on MACD like we had right here. Now if you waited just a bit, you can see that this was a really good buy point to or point to collapse these buy trades back here. The trend is still up as denoted by the 50 EMA above the 200 EMA, but we're going to see what happens here. A really good place to collapse these trades right here, inverted hammer or shooting star in an uptrend. Okay, we're looking to buy the dips in the uptrend, and so we wait. And you can see that price came down to where we really wanted it to be, which was bouncing off the 200 EMA. Again, the best indicator as voted by traders, of the 99 indicators available to traders. Look at this. We have a hammer right here. We also have a Tom DeMark demand or support trend line, swing lower, cycle low, back to the last most recent swing lower, cycle low, and projected out into the future. This was a demand or support trend line back here, broken right here. We're looking to buy the dips in the uptrend, not sell the rallies. And this is a good buy point. Confirmed by MACD punching up through its trigger lines. So this is when you want to be buying on a 1, 2, 3 bottom. 1, 2, 3, and away she goes. Confirmed by MACD punching up through its trigger line. A really strong buy point because it's below the water line for MACD. Okay, when we went long on our trades, either back here or here or here, we always put a stop 20 to 30 pips below the entry point. So if we're going long back here, you want your stop to be 20 to 30 pips southward. Now it's okay to move, when price action unfolds, it's okay to move your stop up to break even right here, but don't trail it. I don't like trailing stops because if you do that and price action experiences weakness, you might get stopped out on a stop that has been moved beyond break even. Like I said before, I don't mind moving your stop up to break even, which would be right here, but not trailing it, just leaving it there once you're in the price advancement to the tune of 20 pips. This is what I was talking about before. If you trail your stop, you could very well get taken out by price action, even though we're still above the 200 EMA, and we're still above this Tom DeMark demand or support trend line. And you can see how price action unfolded after it bounced off the 200 EMA. A very strong buy point right here, a 1, 2, 3 bottom. We also had one back here, a 1, 2, 3 bottom, but it was very weak. You can see very weak price action. Bouncing off of the 50 EMA, still a valid buy point. Another buy point here, confirmed by MACD, bouncing off of its trigger line down here. We got out of those trades in and around here. Good place to collapse right here. We have an inverted hammer or shooting star right here. Again confirmed by MACD. Punching down through its trigger line right here. You can see that collapsing the trade back here would have been difficult because of the fact we had a very short time span on the confirmation here. So to recap, we were looking to buy the dips in the uptrend on the euro pound. The uptrend signaled by the 50 EMA being above the 200 EMA. More specifically, the 200 EMA really offers up the best indication of price action. You can see price going below the 200 EMA here and here. Excellent buy points right here. Buying the weakness in an uptrend, buying when MACD is below its trigger line. These buy points over here and here very weak because MACD was above its trigger line. Better to get it below its trigger line, like down here and back here. So buy point is one in here after the 1, 2, 3 bounce, and one in here after price advances. I guess you could call this a 1, 2, 3 bottom as well. This is a very good 1, 2, 3 bottom in that we have a price decline and then the bounce. 1, 2, 3. The number 3 point above the number 1 point. Nice bounce off the 200 EMA and away she goes. This is the kind of price action that I really like to see here and here and here. Again, we were looking to buy the dips in the uptrend, not sell the rallies. We were just looking at this trend line break back here. Tom DeMark demand or support trend line back here. Broken here, confirmed by MACD. We were looking for weakness. We got some of it in here, very anemic, bouncing off the 50 EMA. Then we got what we were really looking for out into the future on March 29th, the 1, 2, 3 bottom, bouncing off the 200 EMA, and away she goes. Now, the time to buy a 1, 2, 3 bottom is when you get MACD punching up through its trigger line, and then you can see how it punches up through its trigger, and you see how it bounces off the trigger line here, MACD bouncing off the 200 the trigger line. You can see that, and then it collapses here down through the trigger line. This would be a good place to collapse this trade that we took back here. Although the trend was up on the 50 EMA above the 200 EMA, so you would also be well advised to hold on to this trade. But if you want to bank the profit, take it on the railway tracks here, or tweezers, as they're sometimes called by forex traders. We bought down here, sold up here. Nothing wrong with taking a profit or holding on to it because the 50 EMA is above the 200 EMA. Again, we're looking to buy the dips in the uptrend. Very strong signals here, very strong signal here, very weak up here. Of course, when we're up here, we don't know the price is going to decline that far. So, it could very well have continued on up. That's why you want to grab these anemic price weakness areas, just in case we are at the bottom. We weren't in retrospect until here, but we took advantage of these buy points and collapsed them in through here, waiting for a very strong buy signal if it came in the form of a 1, 2, 3 bounce off the 200 EMA, and also a bounce off of the Tom DeMark demand or support trend line. Swing lower, cycle low, back to the last most recent swing lower, cycle low, and out into the future. That's a Tom DeMark demand or support trend line, just like we had back here. Swing lower, cycle low, back to the last most recent swing lower, cycle low, out into the future, followed by this one back here. Back here we had common sense trend lines. Here and here. Nothing wrong with common sense trend lines. A little bit easier to draw in close price action like this. Easier to draw a Tom DeMark trend line when you have price expanding like this. Swing lower, cycle low, back to the last most recent swing lower, cycle low, Tom DeMark, demand or support trend line. Same idea here. Okay, I hope that this has been instructive. We bought the dips in the uptrend and we're in the money, so we're happy campers. We profited back here and definitely back here. We got caught in this anemic price action up here, bouncing off the 50 EMA. I want to talk about now, the 6 strategic times to trade the forex market. More specifically, I'm going to talk about trading the noon hour, which is the close of the London session, noon Eastern Time. It opened at 3 a.m. Eastern Time, closed at noon Eastern Time. Now, we have a member, Shirley Hudson, pictured right here. She has created a course offered down here, forexmentor.com/London close / This is her offer down here. She's developed a way of trading the London close, an accuracy rate unheard of, 90%. She's going to actually prove to you in this course how she achieved a 90% success rate. Unbelievable, although I'm not surprised. Shirley's a long-standing member in the Forex Mentor community. And over the years, she has fine-tuned her strategy for the London close because she is on the west coast of US of A. And noon Eastern Time is 9 a.m. Eastern Time for her on the Pacific coast. And it's easier for her to trade the London close than it is the London open at 3 a.m. Eastern Time. So she likes to trade, she likes the window from 9 a.m. Eastern Time and on up, Pacific Time, 9 a.m., which is noon Eastern Time for traders trading the London market, the London open and the London close. So there's her offer, forexmentor.com/London close / This is a special offer for you taking the time to go through this video tutorial. Again, special offer, forexmentor.com / London close / Please check it out. You won't be disappointed. Please make note of this link, type it into your browser and check it out. And you too can be trading the London close just like Shirley. She'll show you her accuracy rate of 90%, how she achieved this. This is the London close offering quick gains. This is a simple intraday strategy at forexmentor.com / London close / Okay, thank you very much, friend, for going through this video tutorial. And while you're at it, don't forget that our home page is forexmentor.com, www.forexmentor.com. At that site or at our homepage, you'll see products and services offered to help you with your Forex educational needs. www.forexmentor.com. Please check it out. Make note of this link, type it into your browser, and check it out. Okay, friend, thank you very much for taking the time to go through this video tutorial. This effectively concludes that session. And between this video tutorial and the next one coming out in about a week's time, I wish you a great day, a great week. And again, thanks for coming to this video tutorial. And bye, friend, for now. We'll see you later.